There seems, if you take it at face value, the state council, there's just what they said, what they indicated, and just the fact that China has this 5.5% growth target that people said already thought was going to be hard to meet this year, and now you've got commodity prices and supply chain disruptions, war in Ukraine even. Why don't you think they won't go ahead and take the kind of steps, for example, like cutting the reserve requirement ratio, the triple R?
Well, we think it's possible for them to reduce the triple R, but bearing in mind that triple R doesn't necessarily mean that monetary policy will ease significantly or that banks will aggressively increase their lending. What's quite different now compared to, say, 10 years ago when triple R were quite effective in terms of channeling more credit into the system is because at that time, banks have ample capital, whereas now, especially with the major banks needing to reach TLAC requirements on their capital, that constraint really prohibits any large-scale credit loosening in China.
So tell us more about that. What is the healthiness of the Chinese bank at this point? And I know one of the things you brought out in one of your reports was looking at wealth management products and how much banks are holding those now. So bottom line, as we get ready for earnings season, how would you broadly say the sector looks?
Yeah, I think in terms of the reported numbers, we are unlikely to see any significant uptick in terms of reported NPL ratios. And part of that reason, despite the stress with Chinese developers in the past couple of months, is because there are some lagging impact in terms of the timing of NPL recognition. Also, the fact that property development loans in China are often project-based. So it's possible that as long as the projects are still ongoing, even if the borrower may be experiencing signs of distress, but banks may not necessarily book these as NPLs upfront. But what we will be looking at during the results next week is guidance on growth going forward and also on margins, given that the authorities have once again indicated to banks that they should try to lower borrowing rates in order to support the economy. Yes, I think the 5.5% target is going to be quite difficult to achieve given all that's happening. But we still think it's possible for China to employ fiscal measures instead of putting that entirely onto the banks.
Grace, we know that with a lot of these transactions, they're off balance sheet, right? Whether you're talking about non-performing loans or just questionable loans, they get moved around a lot. What are we not seeing that's under the hood, and do we need to be concerned, or has it been working, given that these off-balance sheet issues have been a concern for China for many, many years?
Yeah, actually, with regards to off-balance sheet activities, I mean, in terms of the growth, it grew 12% last year, but relative to GDP, it has been quite stable for the past 2 to 3 years, and a lot of that has to do with the regulatory crackdown, which began in 2017, and within wealth management products, in particular, the portion of what we call non-standard credit assets, which are the ones that we perceived with higher credit risk, that has significantly come down. It's now 8% of total WMP at the end of 2021, compared to a peak of almost 16%. And more importantly, the interbank WMP, the cross holdings among banks, that has fallen to less than 2% at the end of last year. So that really helps reduce contagion risk within the financial system.